It's we had a great day yesterday, both on the podcast and on this webinar. I believe yesterday, Joe's got the numbers for you, but yesterday was the highest day we've had trading. And what did we have specifically yesterday and for the week?
It was 79.60% yesterday, and then for the week, not counting today, the last day of the week, we're up 220%. Huge week, biggest week we've had. But again, it kind of reflects back to the fact that we had trades on Monday and Tuesday, and several previous weeks, either the market wasn't open or we didn't have a trade on Tuesday or something like that. Also want to recognize this is Flag Day and the 244th birthday, almost as old as I am, of the U.S. Army. So we recognize it. Yep.
Yeah, so thanks for all those that have served or are serving in any armed forces. And I know Joe's a big advocate. I believe, Joe, you were previous military, and so.
Yeah, I was in SAC in Air Force SAC in the Vietnam War.
Oh,
and,
nice.
And we have a program, and we forget to mention a lot of times, but we have a program where any vet in any branch of service that has actually physically served time over in all that stuff down in the Near East, wherever, Far East, Near East, whatever, Iran, all that stuff. Iraq can have all the CSE programs for free, and they just have to prove that they were in the service and had assignments in those areas. So, and we've had that for a number of years. So,
yeah, that's really cool. That's really cool. And so, if you pass it along, if you got any friends that are in the, I got a bunch of. I am currently Army right now, and so I've got a bunch of friends that might be interested in that. So that'd be really cool. But yeah, so 220%. We beat our previous record by 100% in a week's time so far. So we're doing great. Now, Joe, do you know where we're at for the month?
Yeah, for the 4 weeks. Well,
yeah, just for June.
We're only 4 weeks into it, and I get them up here real quick. We got 79% yesterday, 79.60 the day before. We were 34.20. After that, 52.50, 53.70. Oh, I'm sorry. You asked me for the week. That's 220% for the week.
Oh yeah. Just for the month of June.
The month of June. We're not. So far, it is 220% for the month of June, not counting today.
And last week's correct. We also got last week.
No. As of the first 5 weeks, which was as of close of business on June the 7th, we were at 466.58%. So if you just added where we are today, if we didn't have today as a trading day, we'd add 220% to that. So it's 686% or so.
That's really good.
For the month, just for the month, yeah.
Yeah.
Sweet.
All right. Another red day. We're down $1 here in Q.
Let me say one more time, because we do have brand new people on here. If you're brand new and you have not notified Sue Ann of your phone number and name, please send an email to support@compound.com. Attention, Sue Ann, give her your name and your phone number, and then she will put you on her computer program that notifies you when these guys, after they break the first time, when they come back either together or individually later on, you will be notified, so you can come, and you don't have to come on your computer or anything. You can leave the screen on all day. It'll be on until the market closes at 3 o'clock Central Time. So send your name and your phone number. Otherwise, you will not get one of those notices because you won't have the information. Okay.
Yep. And sometimes those are really great. yesterday. There was a trade made for 16% on there. Mike has had trades on there close to 20%, 10%, all over the place. So you're able to catch those when we hop back on, and they've been quite useful to a lot of listeners.
Yeah, it's true.
I got a couple of emails when you guys get ready for them.
All right.
Oh, by the way, people out there listening, if you want to ask us any question or comment how you're trading, any trades you've done in the last week before and today, email me, Joseph, compoundstockearnings.com, and we will address them on this seminar. Joseph, compoundstockearnings.com.
Awesome. 77 points red on the Dow. Nasdaq's down 33. S&P is down 6. Most of my watch list is red as well, aside from Starbucks and Google. They're surviving. But third red day on Apple, technically. They're not very big red days by any means, and there's usually a big green run in them as well. But they're closing the day below where they opened, so that's all it needs. Seeing a little bit of a pullback generally across the market outside of this crazy run we've been on, so could have a little bit more pullback today. Not huge gap downs on anything, but we'll see if this this Dow continues to pick up. We're already 94 red now. So that is increasing pretty quickly.
Since we started, if you're paying attention to your option chain, since we started on Q, we're down 21 cents, but the option chain pricing hasn't really changed much. So
same on Apple, actually.
Yeah.
Yeah, I was looking and up like 60 cents ago. The put was at like 45 cents, and now it's only at 50.
Yeah. Very good.
Well, it's catching up now. We just went from 50 to 60. There we go.
Going to get some green baseball hats printed up with MTGA micro moment.
Okay.
Trading great again.
There we go.
Oh, I get it.
Except they're green.
I like that.
Yeah. Pretty good.
It's great again.
Let's just we're gonna do this one and prep a 182.5 strike put. And if this keeps going down pretty hard, we'll hop in. See if we can get something here.
Let's put the 190 strike put as well on Apple. Down to 1 cent bid already, so you're fully tradable. Let's take a bit of a pause here.
All right, let's go ahead and hop in. Filled at 74 cents up to 78 cents here. Let's set up sell the close at 80. And let's hop out here. Filled at filled, and it's filled at 80 right now. It's up to 82 now. There's probably still a lot left in the tank there. We'll see, but filled at 80. Got it up to 82. So that was a quick little trade on 74 cents. 8.1, Joe. Still in that trade. It's still stalling at like 78 cents, so still got time to get out with a profit here. It's kind of going back and forth. E1's passed over blue now. Not too significantly, but I would hop out here now, and so you don't risk any loss.
Yeah, we're just holding on Apple. That moved way too fast for me to even get close to adjusting where I was set at. I didn't lead it enough, so crossing up, so we're taking a moment.
Yeah, we're gonna re-prep the 182.5 strike put. Okay, once that E1 passes down blue, should get another push. So we'll hold there. We're still on the Friday expiration, so that's why all the option prices are. We're still on the June 14th expiration, so that's why all the prices are really low. Let's see.
Spread's opening up a little bit on that put.
Yeah.
Getting 5 cents every now and a while. That's no good.
Yeah, it's 4 cents on mine.
Dow stabilizing down 96 points still.
Sometimes though, when you got large spreads like this, sometimes you get pretty good fills, depending on the platform you're using.
Yeah,
I've noticed that, so that's
very
always
true. Very true.
So we're actually wanting this to go up significantly so it can create some more down space, because E2 and E3 looks like it's going to be in a put position for the next couple of minutes. So we're wanting red kind of flare up here for a little bit and create some bottom end space for E1 so it can track down nicely. But because right now, if we get into a put position when it's this low, it's kind of bottomed out right now, so there's not much room before it bounces back up. So it's a little risky.
We're at 190 resistance and trying to cross up through M2. This is our first possible turnaround point. We're on the top side of M1, so it should push through 191, but there's a pretty high likelihood we'll see it. Maybe slow down here. It's already done.
We just have the one prep out there right now, the Qs.
No, we made a trade.
Yeah, on the first, didn't you prep it again?
Oh yeah, we prepped it again. Yeah.
Yeah, and the 190 is still prepped. We didn't get into that one.
Okay, so we still have two open preps out there.
Yeah.
Okay, great. But we only have the one trade on the Q.
Yep. All right, let's hop back into this trade here. Well, hold off. I put it back up. let's hop in here, get a fill, and if it stalls, we'll get out real quick. Entered in at 74 cents, and at 75, 76. Let's set ourselves to 78 now. It's going down. Let's set ourselves to close at 80 again, see if we can get that filled. 74. 78. 79. All right, filled at 80.
Killer.
So another 8.1, Joe. And there's lots of room, so if you're still in this trade, I think you can get a significant return. I just got out real quick. So you'd probably get filled at 82 right now. 83. As the spread opens up, so sometimes when the spread's large like this or gaps open a lot, sometimes what happens is you won't always get filled on the bid. Sometimes you'll get a really nice cushy fill that's actually above the bid but below the ask. So that does occur sometimes.
Yeah. I'd say most of the time even happens.
Yeah, true.
Pretty often.
Up to 81 now. 5-cent spread, so you get a nice jump on this.
I don't know why he's not pushing down at all.
What's that?
Q's not pushing Apple down at all.
Okay.
On a pretty slow push. Kind of seemed like we were rejecting on 191, but we were still above M1 and one was above 2. So we stayed out of that put. We're climbing a little bit higher now, pushed up to 191.10, I think. So we're gonna let E1 break down, and we need M1 to reject, hopefully off of M3, and get back on the bottom side of 191 to get into this put. A little bit, 20 points.
Yeah. Those are kind of all over the place this morning. So that's interesting. Well, we got that 182.5 strike put prepped again. We're just going to leave it open. Hey, Mike, I'm going to step away for 1 minute real quick.
Yeah, of course.
Mike, what are you doing this weekend?
Me?
Uh-huh.
Oh, I don't know. We're going to go try a new restaurant. It's pretty cool. They have a pillar. It's downtown Seattle. They got a pillar right in the middle. And God, this pillar is probably 8 to 10 feet wide, like huge, and circular and filled with wine bottles on shelves all the way up to vaulted ceilings. And there's a spiral staircase around it. So that's the centerpiece of the restaurant. And I've heard it's really good, so I'm excited for that. I'm a bit of a wine guy, so I don't know much about it, but I'm excited to talk to Dirk a little bit about it.
That's the advantage of Seattle versus Montana. Montana, right?
Yeah.
All y'all had was, steakhouses.
So true. And steakhouse and Burger King.
There you go.
Yeah, a lot less diversity over there. It's been really cool to see all the different things, the different cultures. You'll hear people walking by and speaking different languages all the time. That's one thing I love about this place is there's so much to it, so much going on. It's amazing.
It'd be a big change.
It's a big change. Yeah.
I mean, like I say, you just got more people, from more different places. So.
Yep. Yeah, no, I've already been trying to meet some people, and they're all so different, different interests, different nationalities, languages. It's really cool.
I'm sure you don't lack for any words to start up a conversation.
Sorry?
I'm sure you don't lack for any words to start up a conversation.
How do you mean?
Well, I mean, you're so you talk so much anyhow.
Oh, fair, very fair. Yeah, people aren't super talkative here. You got to get them in the right setting. Keep plugging away up on Apple here. E1 is getting pretty darn high, so.
Yeah, we still got that 182.5 strike put prepped. And keep an eye on this here. It's getting a little tighter here at the lowers, but as soon as this breaks down, we should be in a good position here.
E1's crossing down. E2 is pretty darn bottomed out for Apple, so that's not great. But if we get on the bottom side of M1 and drag it through 2, we should have a pretty decent. Q is pushing up now. This is the window of opportunity for E1, so if we don't get a push down here, we might have to start looking at that call. We're down to 53 green on the 53 red on the Dow, so we've recovered about half of the loss.
Mike, I was out of the room. What did you say?
I don't quite remember. Just something about how this is our window of opportunity for Apple, so we need it to break down through, I think.
But you didn't do a trade.
No.
You took out the prep out. Okay, yeah, I just want to make sure I didn't miss something.
Oh yeah, I was saying that the market's recovering, so.
All's right with the world. There's Micah's cooling fan.
Yeah, here come the trades, baby. Sorry, good juju fan, something like that.
That's funny. I mentioned yesterday that I am an avid golfer, so I was in fact watching a lot of U.S. Open yesterday. So it's gonna be another eventful weekend for the U.S. Open, I think. So it's gonna be a really good tournament. Brooks Koepka's in a good position again to win the third straight. So a lot of good names at the top of that leaderboard. If any of the listeners out here play golf or follow golf, so it'll be a good time.
Have you ever been out there, Pebble Beach?
Yeah. I was out there once. Very, very nice.
Oh, it's fantastic. I was out there. My wife and I went out there for the Concours d'Elegance, which is the car show.
Oh, okay.
Just fantastic. There was no golf involved, but it was sort of out over the golf course, And
Yeah. Wow.
it was really, gosh, it lasted 3 or 4 days.
Yeah. So,
Alrighty, guys, we hopped into this on the
same.
190 break.
Let's we just filled at 69 cents down to 72 here, waiting for it to break back down. Set ourselves to close at 76. And filled at 78.
Apple's taking a moment here.
It'll break down a little more here, so if you're still in this trade, you got plenty of room, plenty of time.
I want to hold the bottom side of 190 here.
What percent you got there on the queue?
There we go.
What percent?
13 that time.
49.52 now. Let's set a sell to close at 51. Let's try. And we're at that 51. Fantastic.
That's great.
Okay, Tony, what was your last queue?
13.
Oh, Lord. And Michael, what was your Apple?
I'm doing the math right now. Filled that at 44 to 51.
Nice.
Huge.
So you're still in this trade on Q. It's back to 78 cents. Probably still at 80 cents right now. So you'd have a nice 11-cent return on a 69 or 70 cent enter.
That's awesome.
That'd be really good.
15.9% on that put.
16.9. That's fantastic.
15.15. Sorry.
Nice.
15.15.
Yep.
Okay.
Yeah, it's heading stabilizing now back up to 48.50. So I'd probably hop out of that about now. We got E1 starting to turn up. And Q's pushing, so I'd take the profit at this point if you haven't yet.
That's fantastic. Where are we at for today, Joe?
You're not going to believe it. 44.4% with these last trades.
It's quick.
That total for today, or?
That's just for the day.
Yeah.
44.4.
That's
Sweet.
really good.
Yeah, I got a little bit nervous for a second because we bought a few cents above 190 for the breakdown of the acceleration, because when that break actually happens, it moves too fast to grab. So we jumped in right before it, and it paused right there. And at this low of a price, you got to be really careful because it, it'll just
Yeah.
1 cent is a pretty decent chunk of percentage.
2%.
We almost pulled out for another flat. I like to do that a lot, but
So we are going to, let's prep the 182 strike put. Just leave that open. Get a little breakdown here once E1 passes. Once E1 passes up through blue, it's creating a little more space to get some downward pressure.
yeah, I agree. We're back up to 100 red on the Dow, so we're increasing again. Let's reprep that 190 as well. 190 put. All right, it'll be up 4 or 5 cents on that. Yeah, it still happens fast. Prepped it at like 52, 53, and it just hit 57.60.
Oh, geez. The Q's coming around here. It's kind of stalling out at 46, 47.
And like we said, guys, play very carefully. Make sure you're grabbing into momentum, things like that, because a little turnaround can bring you back an easy
the low option prices.
7 to 10% really quickly, like in seconds. So make sure you are double sure. Friday's a great day to make money, but just make sure you're double, triple sure on everything, and everything's pointed your way. You have to do a lot less to make it all come together.
Yeah, especially with the small option prices. Like Micah said earlier, 1 cent on a 40 cent price is 2-3%. So E1's tracking nicely for us here. It's kind of stalling out, slowly gaining a little price here, but it should break down crossing blue, and it's creating a lot of good space here for us. And we're still in a put position on the lowers. Blue is still over red on E3, and you can slightly see blue above red on E2, which is good call position or a good put position. So, but since there's not much range in between the lines here, that means we have to set ourselves close at a lower percentage gain or a lower cent gain. So, if you're in at 46, we'd only set ourselves to close at maybe 49 or something like that. 50, so we can get that guaranteed win, but just at a smaller gain. Bollinger Bands are tightening here, breaking down, getting a little pinch. So this could be a good opportunity. I'll wait for the E1 to finally cross, and then we'll hop in here.
We have a lot less space in the middle of 1 and 2. So it's not quite as distinct. The reason for that being when they're side by side, they can cross each other really easily. Whereas on Q, you see that flare and it comes at it at a sharper angle. The sharper it's coming down through, the more it's guaranteed to actually cross it. There's a lot of rejections when you're just running, really close in parallel. They can just kind of bounce off of it like we just saw, a few seconds ago. So that's something to keep an eye out for on E1 is actually how far apart they get, and then the angle of the crossover as well.
Yeah.
Tony, you've done 3 Qs, right?
Yep.
3 closed transactions?
Yeah.
Okay. And then Michael's done it huge. Apple. You do those kind of returns, you only need to do 1 a day.
Exactly. Yeah. So what would be the fun of that? We like trading too much.
All right. A lot of back and forth here. Doesn't want to break down. Getting a really tight Bollinger Band, so could be a potential good one here, but let's see. Gosh. Nothing, keeps flipping back and forth here. Not much really going on. Now it's going right back up. So good thing we didn't enter that trade. Now we're entering, we're going to cancel that put prep. It's now going into more of a call territory here. You can see red starting to cross blue down here at E2 and E3. It's a little too high for me on E1 for a call, but we'll see. Let's see what happens here. Kind of just stalling here. Kind of getting in a conflicting scenario here because E1 really high in the chart, not much upper space as there is on the lower, which that's more of a put position. And E2 and E3 are more in a call position. Red's now overlapping and crossing blue going up, but E1 is about to cross blue going down, which is a put. So it's kind of a conflicting scenario here, and that usually causes a flattening out trajectory. So we'll keep an eye out.
One's crossing down now. We're on the bottom side of M1. We're really close enough for anything to happen at this point. So until we see a Bollinger Flare and get some actual direction out of 1, 2, and 3, not much we can really do here that's not speculation. So I'm just going to be patient. Here, we'll cancel that Apple put. Coming out stacked up. E1 is very high, but 2 and 3 are in a great position. And now we have a full cover on 3, red over blue, with some green bars showing up. So heading into call range, 60 points red on the Dow still. Oh, I wanted to mention on my put fill, it was fluctuating really quickly. So I told you guys when Ed, I believe it was, asked the question about how we fill, I said I lead it a little bit, and you've also asked us multiple times why we never do market fills. So it was bouncing all over the place. It came up, a little bit to the 48, 49 range, and then back down to the 42, 43 range. So I was trying to lead it and catch the momentum. So I actually set my limit at 47 cents, and I was watching the bid ask, and it filled me in the middle of the ask still, and it filled me at 44. So it was 43, 45 at the time. Set the limit at 47, and it filled at 44. That is why we use limit. I could have easily done a market order if I had, if I thought I had that much room in it, which I did, obviously, but could have used a market order, and it would have filled me at 45, 46, maybe, probably. So, especially when it's moving that fast, sometimes they'll even wait, a couple seconds till there's a little bit of pop in the price on a market fill. So keep that in mind. And again, always use the limit, even if you're over it. Sometimes it'll still fill you in between. So
I've got one quick email question since you mentioned that. It's from Ed. It's from Ed. It says, "Hi guys, you guys are great at announcing exit limits. Can you guys announce your entry limits too?"
Well, we don't really enter those, or we don't really say those that much because it could be different every time. I usually say I filled at such and such. It's pretty much you set your limit, or you don't really set a limit. Sometimes you set a limit, sometimes you don't set a limit. It just depends on wherever you can get a fill, but you're always doing a limit order. But if we do set a limit that's above the that we have to set, like Micah just said, give it a little bit of a cushion to get everything filled, we can say that, but it's usually never above the ask. So we usually say we got filled at such and such.
The other part about that is when I'm personally setting limit order, if you guys ever hear a fury of clicking, that is on my order panel. There are little up and down arrows to adjust my limit. So I don't actually click to enter until I know I'm in, but that whole meanwhile, like when I was looking at that 47, I went up and down from 41 to 49, just clicking up and down really fast. So that's not really something I could even live update. When I said entering here, it was at, I think it was still, I think it went a couple cents below my price even. I think it got down to like 41, 43. So it still gives you a chance to enter at the same price or lower, but there's just no way to live update because of, how the mechanics of the order screen works. It's just constantly waving up and down until you can catch it right, and then you click through really fast to complete the order, and then you'll fill.
Exactly.
So, and honestly, that's a great way to fill your orders as well, is just keep right on top of it and kind of hover it. It's like whack-a-mole.
Yeah, exactly. So it's really hard, and we can't give you an exact price that we're going to fill at before it's filled, because we're trying to adjust to get that fill around the bid ask price. But usually once we fill, though, we always say, all right, we filled at such and such. So that's about the best we can do on this end.
And honestly, the fill is, because of the spread and your commissions and all that, the fill is kind of bonus points. You want to have enough concentration in your trade and enough confidence in it that you can fill. Like if you go into a trade correctly, you should be able to fill the worst possible buy and the worst possible sell, pay expensive commissions, and still make money.
Exactly.
Because like obviously there's plenty of room to pull percentages. Like the amount of percentage that we pull out of this, and I think we do, pretty decently according to our numbers, but the amount that we pull out, one second, my cat is rustling the curtain.
To piggyback off that real quick, so the math that I've done to cover for TD Ameritrade or E-Trade to cover, and we're keeping an eye out on this 182.5 strike call. We got that prepped, by the way. We're keeping an eye out here, but the math that I've done in order to cover all commissions and trade fees is usually about 1 to 1.5 cents, depending on your rate. To be safe is about 1.5 cents. So you need to make at least 1.5 cents to cover everything, to cover all your expenses. And our trades are usually, 5, 6, 7 cents on average. So you're getting at least a 4 cent profit. And that's the confidence that you need, is that, yeah, exactly. Like the fill, what you get filled at is sometimes icing on the cake, because we know that even at the ask, okay, that our entries and the momentum we're entering will far exceed the ask, and that's the highest price that's on your that's on the option chain. So it's very rare that we don't. It's either a loss for a little bit or it's a gain for at least 5, 6, 7, 8 cents. So, but the math is the relative math to cover all your expenses, commissions, trade fees, whatever, is about 1.5 cents to be safe. So you make 1.5 cents, you make 3 cents, you just got a 1.5 cent profit. So that's kind of like a quick math for everyone out there that's wondering.
Yeah, that's awesome. Awesome information.
Since y'all are kind of talking here, let me give you another email.
Okay. Yeah, it's just kind of going back and forth right now, so.
It's a little longer, but y'all answered it. So if do something, just go do it and come back to the email. It says, "Hi, this is from Keith, not our Keith, but Keith, client." It says, "Thank you for your help and guidance. Number one, yesterday was my first day, and I had a win and 2 losses as I tried to mirror some trades. Overall, minus 7.2%. There was a discrepancy in buy to open fill prices, what you got and what I got. So I need to sort out what my shortcomings are. I'm sure it will be any number of factors. Can you comment on the following?" So here's the questions. Once you're prepped with the number of contracts and the strike price, is your placing the order a click and confirm, parentheses 2-click process, or you use more of a hotkey approach, 1 click?
Yeah,
That's
I do the 2 clicks.
2 clicks. Okay.
Yeah,
I do as well.
it's for me, I like the 2 clicks because sometimes these things move so fast that then I'll delete that prep or I delete that confirmation and then I'll readjust. So for me, it's 2 clicks.
Okay. This next was these are various things he's asking. It's internet speed. Well, I don't think there's much you guys can say on that because who knows what obviously the faster the better, right?
Right. Well, also the platform speed, the speed in which it shows the platform speed in which it shows real time data. The bigger ones, the bigger platforms like TD Ameritrade and E-Trade have really good speeds, but you're paying more of a of course you're paying more of a premium for those. But make sure that everything is on a real-time data. Your platform is set to real-time data because sometimes if you're just starting out, check the platform and see if it's up to date real time because sometimes it's on a delayed type of data. I don't know what platform you're using, but I'm familiar with E-Trade and TD Ameritrade. So just call the platform customer line and they can set that up for you. That also could be a factor. I'm not really sure why they don't always have it set at real time, but I had to do that for both platforms. But I don't know what Mike has had to do.
Yeah, usually there's a minimum deposit, and then once you're over that, you get real-time data. Or a lot of the paper trading platforms, you just have to make a couple trades and then call them. And then sometimes they do both. So if you're paper trading, you still need that minimum deposit to get real-time quotes, but you can still paper trade. You don't need to spend anything. So, and the other thing is.
Oh, go ahead. No, go ahead, Micah.
Some of the other thing is sometimes it's out of your control a little bit in terms of speeds. And again, that's where you just want to make sure your trades are as confident as possible so that you have that room. I have noticed a huge difference in my fills from Montana to here. If you remember, if you've been here since the beginning, you'll remember me oftentimes saying, all right, we're going to try to enter this, and we missed our fill, we'll adjust down and trying to get into it, because by the time we saw it happen and we're in it, the option price showed us something, but the real time was just not there. So I went from wireless in Montana to Ethernet in Seattle, which is a huge improvement. Also, yeah, Ethernet cable. Absolutely. There's no reason you shouldn't have an Ethernet cable, in my opinion, because I've done wireless and it's terrible. So make sure you're hardwired into your internet and everything's good with your platform. But you also can't control where you live necessarily. So
if you live in a weird area, no, I shouldn't say weird area, but a rural area or where they don't have a lot of offers for. If there isn't a lot of mainstream internets, Comcast, that's what I use, Comcast, they have really good speed, or stuff like that, definitely, yeah, 100% try to, and it's more of like a local internet base where it's only like a regional company that covers that area. Yeah, definitely try to get into the Ethernet, but if you have Comcast or a larger broadband internet that's nationwide, you shouldn't have any issues wirelessly.
Let me Let me clarify this on the internet speed that Mike said. I didn't understand this. Are you saying the Ethernet cable comes in? Now, normally, like right now, mine's plugged into the wireless thing. Okay. Mm-hmm. What you're saying is it's going to be more accurate, faster if it's plugged directly into the computer.
Yeah. So you have a cable from the wall to the modem, and then you can another Cat5 cable that goes from the back of your modem straight into your computer. And they'll have those ports on laptops, desktops, everything.
Oh, so you can still have Wi-Fi, but yet your trading computer can be plugged in directly.
Yeah, the rest of the house is on Wi-Fi, but it doesn't matter the strength fluctuation, any blockages, anything like that.
Well, you learn something every day in here. I didn't know that.
Yeah,
That's-
it makes
But of course, I come from the old days when we had dial-up modems, and back during the old days, and I've said this before on this program. Back during the old days, someone would make a trade, they'd hit the key once and nothing would happen. They'd hit it again, and they would hit it again, but the computer remembered all 3 hits, and they'd end up buying something 3 times, instead of once. So we had the 2-day seminars. We always had to fix a lot of positions where they'd either think they bought 2 of something, and they only meant to buy 1, and they'd sold 5 or 6. I mean, they would just get overreacted.
Oh, good. Kudos for you.
Yeah. The last one on this part is computer strength. That's kind of a big question. I mean, obviously, you want a fast computer, and not much you can say.
These are all relative, honestly, to where you're at in the country or in the world, wherever you're listening from, and what you can afford. And everyone's got different preferences. Some people are PC, some people are Mac. I don't really know of certain computers that are better for trading, honestly. I use Mac for everything, so I know a lot of people use PCs for everything, so there's personal preference.
Yeah.
Well, I've learned something on this cable thing. Then he says, I feel my internet and computer are okay, but maybe I need to scrutinize it more. Probably you don't. You might consider that cable thing, though. And the next to last question, can you please speak more in the webinar about what you're watching and about how close you could be to entry, especially the final trigger? I can answer this one. They do that, Keith. They talk about it all the time. All day today, they've been talking about where they are and what they're watching and all that. So I'll answer that one for them. And the very last one, is one equity a better one to focus on for a beginner? If so, which one, QQQ or Apple? That's the last question.
Honestly, and Micah can answer this after if he wants to, but honestly, the difference, there is really no difference. Just depending on what I've found is you can get more contracts filled with QQQ, I think, than with Apple. So, but if you're using 100 less, it doesn't really matter.
Instead of Apple or QQQ, think of the strike dates that you see above your option chain. Think of that as a difficulty scale, like a sliding scale. So the closer you are to the left, that's on like hard mode. Like today on June 14th, that button is pressed. That's like expert mode, like on a I don't play video games, but on video games, they have you pick your difficulty. Same exact thing. And the farther you get to the right, the slower it goes, the less volume it has a lot of the time. So honestly, if you're worried about how fast it's moving, anything like that, you're new to it and you don't necessarily need as big of profits. Like you're not going to make as much also because it moves slower. But if you want to lessen that risk even more, just do a couple weeks out, something like that. You'll still see the movement and understand the trading, but it just won't be as aggressive if you're wrong or if you're a little late to it, something like that. It'll move a lot slower. So that's another.
Just to clarify one thing you said, he's talking about expiration dates. Some platforms are set up differently. So on my platform, they're stacked up. They're not right, left, or whatever. So so if you have an expiration date, what he's talking about is we're in the current week's expiration. So that is what he's saying has the most volatility, the most price fluctuation, and the place where you're going to see the most gains. And if you're not comfortable with the whole strategies yet, go out a week or two or whatever. I wouldn't go more than 2 weeks probably, but yeah, he's talking about the expiration dates there. And then, but also just kind of follow up on another question here. The key for us here, we of course enjoy all our listeners being on here and everything else, but the key here is to watch what we're doing. If you can understand why we're making the trades at the different points, and we try to make it very clear what we're looking at, why we're not entering here or why we entered here. if you can learn the process, you can start doing this on your own, and it's a lot. And of course, that's the whole key here. But so try to that was an answer to a question, that Keith had in one of those questions. But yeah, the key is to understand how we're trading. We do a lot of lowers, we do a lot of different little aspects here, and that's the key to this whole thing, is to learn what we're doing. And because if we can walk through, of course, the trades of all we're doing, and you all will profit. But if you can understand it, like how we're trading, you're going to see a lot more gains, because you'll be able to do it on your own and maybe even enter before we do or after we do. So.
Okay, I got a question. On a lot of trading platforms, when you enter an order, you've got your little setup there where you can put the order in, what you want to buy something at, and what you want to sell it. Just like a stock. $50 in stock, you want to sell the call for $5. And then it's not going to execute it unless you get that exact spread. Now can you do that on these kind of trades, or is it wouldn't necessarily work?
Can you say that again? I couldn't really understand all
that. The trading platform where you have your buttons to send in your trade, you can the price you want to buy something at, the limit price, and then what you want to sell it for, or whatever you're going to sell, what you're going to sell.
Close. Yeah.
Yeah. So now it works great on doing a traditional covered call, because we're not concerned about movements as much as a traditional covered call. And you may not get that price, but if the price goes up or down, what you're getting for it when you sell the call goes up and down, so you get the same spread, so you get the same percentage return. Does that work very well? Can you put in those kind of orders on these trades?
I'm having a little bit of a hard time understanding the question, but I'll try to answer like this. Maybe Mike could answer better. So what happens is you have the option chain, okay? Then you have however many strikes you want available. Mine fluctuates between 10 and 12 strikes. We choose 1 to 2 out of the money. I don't really do any in the money. Sometimes I do. Well, actually, sorry, I don't do any in the money. I do at the money or out of the money. And then you choose that. You enter the limit order that you want to get filled at, and then you create a closing order, and you can adjust that closing order to however many cents you want to gain on that. So if I enter here at 34 cents on this call, I'll then go right back in, set a sell to close order or a closing order for 39 cents, however much I see the price fluctuation being. And then the market maker will it'll automatically fill at that no less than that price that I set. So it does it automatically, and I don't have to worry about going in and.
Well, I think we're talking about the same thing. What I'm talking about here, and again, let me use simplicity's sake, let me use a stock order, and you can sell a covered call. So you're on your option chain, and you can see you can buy this strike, and it's going to cost this much, and you're going to sell this one over here for this much, because that's going to give you 5% return. Now, when you buy that stock and you sell that call, you put the orders in at the same time. I mean, you put in one and say buy, and then you sell, and you hit send. Okay. It may not get those exact prices, but it's going to get you the 5%. It's going to get you the proper spread.
So you're saying that you're pre-setting your 5% gain before you enter. Okay. No, that's not how this works. So how it is we have to see the momentum first before we enter a trade that we think we will get our percentage return. So we enter at 34 cents. We see a momentum like, okay, I think we can get a 4-cent gain on this, which would be 6%, whatever. But yeah, there's no guarantee of us pre-setting our our percent gain before we enter a trade.
Okay, well, I figured that was the case, and I have not tried it using that because the way these things move, totally different than the way when you buy a stock and you sell a call, and you don't care if it goes up or down, you just take that spread. And over here, you wait very long, you lose money. So
yeah. Another thing on that too is kind of a mindset thing, but one of the worst streaks of option trading I ever had is when I had performance goals that I felt I had to hit for myself. If you notice, we're doing, pretty decently well with this strategy, and the only goal we've ever set is 1% a week.
Yep.
Now, obviously that's not necessarily even something that we're after is 1% a week, because we know we can do that,
Yep.
So setting goals is great, but you got to be very careful with it, and especially in a trade. I mean, again, micro moment, we're in these things. You've seen us pull 20-second trades, like basically as fast as we can fill both sides of the order, we're in and out. In that time, you don't not have any time to, look at your technical chart, look what it's doing. That should be done already and out of the way. You're catching a momentum move as much as you can out of it. So we're usually in these trades for the same amount of time for all of them. Sometimes we'll be, flat return. Sometimes we get 4%. Sometimes we get, 10, 15.
The reason I used that 1% a month was to show and introduce this thing. It was really, there's so much verbiage all the time about people, particularly younger people getting out of college, don't have any money. And, by the time they have any money, they're maybe 25, 26 years old. They only have a few $1,000. And they use a regular broker maybe, and in 40 years later, they can retire at 65. And they've only got, $1 million. And that 45 years from now, that $40,000, $50,000 a year is not going to amount to anything.
Right.
I'm trying to say this is it's achievable because you only need $1,000, never put in another penny, $1,000. And in 20 years, which is not that far off, it may seem far off when you're 25 years old, but you're going to have $30 million at 1% a week.
Yep.
And you only have to spend a few minutes a day, like you got. Well, of course, we spend longer. I mean, in theory, somebody could have been out of this thing, 50 minutes ago.
Yeah, they could have sat on those trading bounds. Yeah. No, and don't get me wrong. That's absolutely, I fully agree with that, and that's amazing. That's why we're here.
Yeah.
All I mean is, like, in the actual trade, like, don't enter with a percentage goal in mind. Just enter as much as you can and stay quick about it. Because
the thinking, and he's exactly right, because I'm a very goal-oriented person, and that's what I can get stuck off on as well. And just like everything, this is all a psychological game. What he just talked about is all psychological, and the only concern you should have is getting a winning trade. And then you get out, you restart, and get another winning trade. You get out and restart and get another winning trade. Try not to hold yourself to, all right, I need to get 4% on this strike in order to get this return, in order to see this. You get analysis paralysis is what they call it.
Yeah.
And so the main goal here is just to get in a trade, win, get out.
Yep.
And repeat.
I think also what a lot of people would say, oh, this stuff, this is not real. We've never heard anybody making this. Well, that's because your mind is back 10, 12, 15, 20 years ago in the market, in the brokerage business, where things don't change. And you couldn't do this. You couldn't do this 5 years ago. You couldn't do this as reliably unless you had that chart, which we've only had about 3 years. And the platforms didn't exist. So yes, things have changed. It's like we go to the moon. Things have changed. Who would have ever
thought? True.
Yeah, 100%. And honestly, in my opinion, I believe a lot of trading, and you're already seeing it on Facebook. Already seeing it. I see like 4 and 5 people, monthly or weekly, talking about similar strategies of what we're doing right now. And I don't see the results, honestly, is what we're doing, but there's similar strategies where a lot of people now, they're trading very quickly and they're seeing these quick returns and they're making a living off of this on a daily routine. and it's like they're almost redefining day trading. And because they're in and out, and we have our capital at the end of the day. We don't hold over days, and so this type of stuff I think the industry is going towards, and is the future, because you see the results immediately.
Well, also on day traders, according to the NASDAQ, most of them lose their money. Over 80% of them lose their money. It's because every single person, every single one of those hundreds of thousands of day traders out there is thinking, and every one of them's thinking different. And they're all thinking they've got something right, and they think they're going to buy something that's going to go up and they're going to sell it. Well, it doesn't work out that way. We're not thinking. We've just got a simple thing here. We got two different stocks we're using these things on, and you're going by some really definitive rules and a chart. And you're not trying to guess what's going to happen in the market. I mean, look at the market today. The whole damn thing's down substantially.
Exactly.
And, well, some people, well, those people are, you see all those red figures. That's because there's people really losing money. They're doing it themselves, They're really losing money. So.
Yeah. And it's so interesting. I just had this conversation with a friend of mine a couple of days ago, and yeah, no, that's exactly right, Joe. And the just the whole facet behind this is just in and out, protect your assets, in and out, protect your assets, and just cherry pick, like Micah was saying. Cherry pick with the strategy is what we're doing. And but also what Joe just said is very true, is I like the KISS theory, keep it simple, stupid. And that's why I try to incorporate myself, because if you overanalyze, I'm a big golfer, okay? If you try to overanalyze anything, you're going to be a terrible golfer. You got to keep it very simple and have just a simple strategy, or a simple swing, or a simple swing thought, and usually you're going to excel in that area. And so, we're looking at 3 different lines here: E1, E2, and E3, and the tick, pretty much. And that's pretty much it. Just keeping it simple.
I can tell you back, when I was at Merrill Lynch, I mean, there was no way in the possible you could even, they had, I was in Miami Beach, and in that whole area down there, South Florida, you know how many people they had that were designated to do an option if you called Merrill Lynch and wanted to write an option on the stock? Of course, they didn't have this kind of stuff, right? Yeah. One person in the whole damn state, one person was an option person. One person in the whole state,
yeah. The team that developed this over at Compound Stock Holdings company Joe started did a fantastic job with this chart. This ISE chart, ICE chart, and been real good.
I also want to point something out. I did some math while you guys were talking. It is different times, right? And I know this is Friday, and I know we have a ton of fluctuation, but what are we at for the day?
We've got 44.4%.
44.4%. Okay, so in reality, guys, we're not even touching. Like, that may seem like a lot, but in the first swing, I went back and looked at how the option prices fluctuated. The first put went from 32 to 86 for 168% change. Then it turned around, bounced up. The call went from 25 to 38 for 52% change. And then it came back down, and the put went from 33 to 62. That's a total of 307% in the first little bit. And Tony and I are tag teaming it. So we're grabbing a sliver of what's available. Like, that, times are different. Everything's happening, like, there's so much opportunity. 307%, you don't need to pull much of that, of what's available to make great returns. And that's all we're doing. We're just grabbing a sliver.
I predict that probably within a year and a half, you'll have on some little glasses, and you won't even be hitting a mouse to do the trade. You just blink.
I hope so. That'd be great.
That'd be really nice. The glasses are reading your mind. That's a little scary.
Right. Well, the blink would be a big part of it,
Okay, yeah. It's a confirmation, but still. But yeah, no, that's a great point, Mike. Yeah, that's all we're doing. We're just cherry picking, and I mean, 200 and where we at for the week, Joe? Like 270%, I think.
220. Oh, well, no, 220, not counting this 44, so 264, yeah.
Yeah, just for the week, and all we're doing is cherry picking in an hour a day, and so a lot of people, if you threw these numbers out on Facebook or internet or whatever, they'd be like, oh, that's not real. They're just trying to scam you. Well, it is real based off of the potential of what Micah just said. Yep. And which is, it's very interesting. Not a lot of people realize that the fluctuation in price that happens every day is so significant that people really don't understand, doesn't really fathom it, because everybody is mostly used to that buy and hold strategy. I mean, that's what they grew up on. That's what is still going on. What's that?
They still do that.
Yeah. Oh, yeah. Because they think that's the safest route. And honestly, I think that's probably one of the more dangerous routes, because there's a lot of fundamental factors. And if you can eliminate as much fundamental factors as possible, and what I mean by that is Apple comes out with news that their iPhones are breaking, or China trade or whatever. If you can reduce the fundamental factors and try to just stick with as many technical factors like this chart as possible and eliminate that, you will be less vulnerable to the mercy of the market. And that's what these charts are doing. And you can't be affected. It's impossible to be affected by a fundamental factor in a minute or 2 minutes. I mean, it would be very, very hard for that too. And that's
the fact that we're never in overnight attests the fact of the world we're living in today. You never know what's going to happen tomorrow. And a lot of people that are the buy and hold, and they see their stocks drop substantially overnight or over a weekend, and all of a sudden they think they really lost that money. They really thought that they lost it. Well, they did. I mean, if they hold long enough, it's probably going to come back. But it's never going to come back, probably on average 5 or 6 or 7% a year. And my goodness, that's why they never build great wealth. That's why they have to sweat and toil their entire lives, instead of putting a lot of money in there, so they'll have some money to retire on. So, and then
there's a lot of stress involved too. A lot of stress. That's what we talked about on the podcast yesterday. That's a lot of stress. You're going up and down every single day or every single month, and then only getting 5% at the end of the year. That's brutal.
That's right. And that's why I always compare what we're doing to pole dancers, and you never see a pole dancer that retires.
Yeah.
Good point.
Yeah, so I completely agree with you guys. Everybody, kind of rags on options like it's hated because it's so risky. A few days ago, I guess it was a while ago now, a couple of weeks, but I saw with my own eyes Apple just fall off like $6 or $7 in a few minutes. Just had bad news and just bam. Like, stocks are risky. So if you're in it less, even if you're in options, you're mitigating so much risk. It's unreal. So
especially if you're trading with a short amount of time period. And I am paying attention to this position here. It did shoot up, but honestly, it only shot up 3 cents. So this what these charts are showing right now is kind of misleading, because the price fluctuation didn't really go up much. That's why I didn't enter. But we are paying attention still. But anyway, so the more you can eliminate those fundamental factors, I think the more successful you're going to be. But anyway, Joe. So where we end up the end of the week here, I'm probably gonna log off for now.
Okay.
Just a recap of the numbers. Where we at?
Yeah, we're up. We're up for the week, 220 plus 4, so 267.4%, and up for the day, 44.4. If you have guys come back, I'll probably go ahead and send out the Friday report to show these figures and just point on there that I won't be around for the second session, but if y'all come back and do something, if you come back, then I'll report that on Monday. So.
All right. Anything else there, Michael? You're going to stay on, or?
Oh no, I was exploring that call, but we were on a good, really good informational thing. So I think that was a lot of added value that we brought today. So I'm good.
Michael, just remember to mute your phone this time when you go off. So.
Yeah, exactly. I'm great at that. We know that.
Yeah, well, you guys have a good weekend. We'll see you later.
See ya.
Have a good one.